should be able to do whatever you want to with this, right? If you want to eat all of it, great. If you want to throw it away in the garbage, that's your prerogative. But here I come, the government. And I get to take 40% of your lunch. And that, Lauren, is how taxes work.
Yeah, pretty doggone accurate.
Yeah, classic moment from Parks and Recreation. Using it to spice up our tax chat. That's when Ron Swanson gave his thoughts on taxes. And with the tax deadline just 1 month away, we do have a real tax expert here to help us prepare. Ted Jenkin is a certified financial planner and president of Exit Wealth Advisors. Ted, good morning.
Good morning.
Great to have you with us.
You know, Ted, before we file, obviously we got to get all that stuff together. You got to find the receipts, find all the papers and whatnot, W-2s. Let's start with organization. Like, what are some things people should keep in mind when getting organized?
Well, I like to organize things in 3 buckets, starting with those income documents, figuring out how much money you made in 2025 between your W-2s from your employer, 1099s as an independent contractor, 1099 interest and dividend statements, unemployment benefits, and also Social Security as well. And then, of course, during the year, you have life changes. What happens if you got married or got divorced or you had a new baby or you moved states? All of these things could change your filing status. It could change the tax credits that you qualify for and your income as a whole. And then, of course, there's deductions. And simply put, a deduction lowers your income before you pay taxes. And there are 2 flavors, standard and itemized. You know, most people take the standard deduction, which is a fixed deduction, and then itemized deductions are variable. That includes your mortgage interest, things like charitable contributions, state taxes, etc. So this is a good place to get started.
And you've got some other deductions here as well.
Well, it's big. There was a huge tax overhaul last year, starting with the SALT taxes, which are the state and local taxes. The cap went from $10,000 to now $40,000 if you itemize. That's one of the biggest overhauls that are on here. There's also a $6,000 senior bonus deduction. This is a standard deduction on top of it for people who are 65 and older. Income limits do qualify, but it'd be $12,000 for a married couple. And of course, a $10,000 auto loan deduction can be there for interest if you bought a new car in 2025, and it was also made in the USA. You have to check the VIN number. And then I think the biggest one are tips and overtime. A lot of people in this country work on tips and work on overtime. There's a $25,000 tax deduction for tips and $12,500 for overtime. All big things for people and why we're seeing refunds go up.
So I'll say it again. 1 month to go.
Yeah, I know.
Let's repeat it. 1 month to go.
The witching hour.
Last minute to-do list. Is there anything we can do to help ourselves in crunch time now?
I am the bearer of good news today. Right? There's still an opportunity to save money in 2025, even though it's 2026. If you have an HSA called a health savings account tied to a high deductible health insurance plan, and you did not max out your contributions in 2025, you can actually make a contribution now and still deduct it for 2025. This is also true for a tax deductible IRA. And if you're self-employed, you have things like a SEP IRA or a solo 401k. But one of the big things I want people to pay attention to are tax credits. A lot of people installed last year new windows, new doors. They may have put in an HVAC unit. All those things can give you a tax credit of up to $3,200. And let's remind people, a tax credit is a dollar-for-dollar reduction off the tax that you owe. So if you owed $1,000 and you had a $1,000 tax credit, you will owe $0. That's really important because a tax deduction lowers your income. A tax credit lowers your taxes dollar for dollar. Pretty cool.
Yeah, it is.
What do you do if you need more time to get this done?
20 million Americans are going to file an extension here. So if you're not ready to file by April 15th, you can file Form 4868. This will give you another 6 months until October 15th in order to file your taxes. However, let's remind people, just because you extend the time to file doesn't mean you get to extend the time to pay. Right? That's the problem.
Tricky.
So if you owe money on April 15th, you have to pay. Even if you're filing an extension, you need to make an estimate. And by the way, those penalties are huge if you don't pay on time. Failure to pay, failure to file, and also the interest the IRS is going to charge you. I would say with St. Patty's Day tomorrow, don't put it on the luck of the Irish here to get your taxes done.
Ooh, look at those numbers.
Yeah, they're massive. It's 5% per month when you fail to file and you owe money to a maximum of 25%, and 0.5% per month when you fail to pay. So if you owe money, pay by April 15th or make a plan to do so.
Thank you, Ted.
Yeah,
We appreciate the good news.
Yeah, good news. You can still save money.
Hey, thanks for watching. And don't forget, you can catch the Today Show every morning on NBC or take Today when you're on the go. Just follow the Today podcast on Apple Podcasts, Spotify, or wherever you listen.